So as I mentioned just a moment ago, a real kind of firework was dropped on Friday after the close of the markets. An article in the Wall Street Journal hit the wires that indicated serious discussion at the Federal Reserve has now actually begun. Plans to wind down that $85 billion a month bond buying program. And of course, I'm a loser. I was sitting there, oh, did you see this? And people around me were saying, who cares? It's Friday, Liz. Well, my next guest cared. He has noticed something quite for some time about inflows and outflows of treasuries that could perhaps offer even better clues about the Fed's next move. He is going to articulate those to you. He's Larry Hilzenrath. No relation, right, Larry, to John Hilzenrath?
That's right, no relation. He spells it with an S, I spell it with a Z.
Yeah, we see that on the graphic, and of course, as you said, my cousin who's got his name spelled wrong. Well, you're with Genspring Family Office's research director. You know, you're on the phone with us from Florida, and I like that because, again, you're separated from all the chatter on Wall Street. But what have you noticed? Because the last time we spoke, you had successfully predicted the drop in gold, and that was weeks before it tanked. Tell us your take on the Fed and your reading of these tea leaves.
Yeah, I don't think that the Fed is any closer to reducing their accommodation. Of course they are going to talk about it, and of course they're going to need to plan on a way to exit eventually. But if you look at the data, they're waiting for 6.5% unemployment. They're waiting for 3% or greater GDP growth in a sustainable way. They are not going to back off on these programs unless they have to. Now, one reason they actually might have to taper a little bit is that if you look at the monthly report, which is the Treasury statement that the FMS puts together, they actually track the inflows and outflows to the Treasury. So this is money coming in through taxes and money going out as spending. And actually in April, there was a very large budget surplus.
Okay, so let me stop you there.
Billion.
Let me stop you there so that we can clarify to people so far as you develop this story. Every month we get this data and we find out what's happening with the Treasury, but not everybody looks at it. So you notice that in the month of April, we actually saw surplus. What did that tell you?
Well, one thing that it means is that the Fed's buying of treasuries as part of its program to get the yield curve down where it wants it, it has to know how much treasuries are coming to market, how much are available. So it's gonna change its amount that it's going to need to purchase based on, it doesn't want to hold too much of a,
right, so
of a
it would
certain
purchase
issue.
Less, correct?
That's right. So it might have to taper. Not because it wants to, because the economy is necessarily where it wants it to be, but because there might be less treasuries being issued that are available to buy, and it doesn't want to skew the market if less treasuries are coming to market. So as this budget deficit shrinks, and it is significantly lower than it was at this time last year, as that shrinks, the Treasury is going to be issuing less debt, which means the Fed might not have to buy quite as much to get interest rates where it wants them.
So what's next, Larry?
Well, I mean, if this budget deficit continues to shrink and Treasury issuance continues to slow, it's possible the Fed would reduce some of that buying. Now, not a huge amount, not enough that everyone's going to say, oh, the Fed is backing out.
What would that do for the markets? Everybody, or two, I shouldn't say four. It might be to the markets, or it might be for the markets. It may have, SAT word of, alert here, salubrious, a positive effect. If, for example, it shows that maybe this economy is finally getting sort of a bit healthier, and therefore we don't need to prop it up with that much medication.
Well, if that's the reason, then it is a good thing long term if the data continues to improve. I think there's still a big if. The economy is growing very slowly, and there has been improvement in the unemployment picture, but it's still not where you would want to see it. It's not where the Fed wants to see it. Their own projections, if you look at their notes, their minutes from March, they're still projecting mid to late 2014, early 2015, before those measures improve enough for them to move.
Larry Hilzenrath with a Z of Genspring Family Office's research director. We thank you. And in essence, let me just distill this. He says, do not expect the Fed to start making any market changes. They will be very subtle. Thanks, Larry. Be sure to stick around for the other Hilzenrath. After the bell, we we are speaking to the journalist who broke the story that is affecting at least the Dow Jones Industrials, John Hilzenrath of the Wall Street Journal. He has more on the Fed's plans. What's changed over the weekend? Did he get more information? We're going to find out coming up 4 p.m. Eastern Time.